Good morning. Welcome to Market Day Report. Welcome to a Thursday. Now, a Thursday during a normal trading week means export sales from USDA. We'll talk about that in just a moment. Also, the report of a flash sale overnight for soybeans. That's coming up. First off, how did we trade markets in the overnight session? We'll start with the corn market and the December contract down a tick higher on the March contract, though, at 430 and a quarter. What about the soybean trade in the overnight session? Higher with January at 986 and a half, up 2 3/4, and the May at 1004 and a quarter, up 2 3/4 cents. Soybean meal was lower in the overnight session, and soy oil moving mostly higher, and that after the report of a flash sale earlier this week of soy oil to South Korea. Wheat market in the overnight session higher. March, Chicago up 3 1/4, 551 and a half, 4 1/4 higher on new crop July, 567. New crop for hard red, July 561 and a half, up 3 3/4, and Minneapolis, let's take the March contract at 596 and a quarter, up 6 3/4. Cotton market in the overnight session higher, up 8 points on the March, most active at 71.33. Brian Hoops is president, Midwest Market Solutions. Okay, Brian, I teed us up there. I guess we could start with the flash sell overnight. Soybeans to China.
Great place to start, Tony. Good morning. So, soybean sale of 136,000 metric tons of beans to China. That's the second sale this week of soybeans to China. There's been some reports that because of the cheaper discount of Brazil, especially February, March timeframe, that China was buying beans from Brazil and not from the U.S. But this tells us anyway that China still has an appetite for U.S. soybeans, and they're still doing these hedges just in case things get hot and dry. And the forecast still looks very good. The crop, I think, is in South America is still in great shape. Crop size is getting bigger. The forecast this morning is a little bit drier than yesterday for Argentina and for Mato Grosso, and that's probably why we're starting to see some Chinese demand come back to the United States and continue these purchases, which are essentially hedges against higher prices going forward. They can be canceled if, in fact, they have a big crop in South America and prices turn lower. So other news, export sales this morning, outstanding numbers for corn and soybeans once again. Wheat was 13.9 million bushels, very similar to what we've been doing recently. Meanwhile, corn was 68.2 million bushels. Mexico was a big buyer of that. Japan was also a good buyer of U.S. corn. And then for soybeans, it was 85 million bushels, a very strong number once again. China accounted for about 25 million bushels. Unknown destination was a little bit smaller than that, but over 20 million. And surprisingly, Spain had purchased some soybeans and then switched them from an unknown destination into Spain, and they were a big buyer of beans last week. So those three things combined, I think, are enough to maybe give us a little bit of short covering. I don't expect a big rally, but some short covering could be seen. And then you also had Stats Canada out this morning, and they updated their all wheat production numbers, which came in larger than their previous estimate, maybe down slightly from last month. And spring wheat numbers included part of that. They were a little bit larger than trade estimates, but we are seeing a little short covering off that news in the wheat in the trade from that 7:30 release until 7:45 close. So now we're looking for fresh news, what can drive us during the rest of the trading session.
All right, so if the world is awash in wheat, and that's going to put pressure in the market, what happens when we tighten up supplies? Will demand continue? That's a question for the next segment. Hang on, we'll talk livestock futures as Market Day Report continues in a moment. One day closer to seeing cash cattle develop. 192 to 194 is what we're seeing for asking prices right now. We did see a small load move yesterday, and I believe it was 190 to 192, somewhere in that range. But as far as wholesale movement of cash cattle at this point, nothing yet. We'll watch and see if it develops this afternoon. Okay, let's go to the live cattle market from yesterday. December at 188.37, down a dime. February contract 188.32, lost 3/4 on the session. January feeders at 256.95, down 2.35. And looking out to the May contract at 256.85 was down $1.50. Hog trade. Hogs front month 82.50, down 75, and 101.40 on the June contract, down $1.10 a hundredweight. That was one of the contracts earlier in the week that hit 103 during the session. Don't remember if it was Monday or Tuesday. But on a Thursday morning, USDA out with their weekly export sales numbers and bringing back in Brian Hoops with Midwest Market Solutions, looking at that beef number, marketing year low and 100 metric tons of beef. Is that concerning?
It is concerning, and I was concerned when I looked at it and read it initially. Boy, that was a disappointment. But then I kept reading through the paragraph, and they also had decent shipments for 2025. So it looks like maybe just for the 24 calendar year, 100 metric tons. But it was 13.7 when you include the next marketing year. So that's a little bit of a relief that there was some decent export business, not outstanding by any means. And shipments, let's see, were 14.4 million tons. So again, not anything outstanding. The pork sales came in at 35. That's better than what we have been doing recently. So overall, pork numbers are pretty good. I think we pretty much ignore them in the pork complex today. We're trading technicals on Tuesday. We had a very poor technical close, followed through with some selling interest yesterday, closing near the lows. If we can see follow through selling again this morning, I would suspect we'll see pressure throughout the day. But if we can hold those lows and don't see that lower opening, probably some short covering developing in that hog market. The cattle's still waiting for that cash trade, as you mentioned. We just can't find that cash market yet. Asking prices are much higher than what they were a week ago. The problem is the box beef has not been responding. We've been working that box beef mostly lower, and packer margins are deepening into the red. I think I said yesterday they were about negative $70 ahead. They're about $82 ahead in the red this morning, which is a concern longer term for that demand. And packer demand is what we want to see. We want to see better demand, more cash being paid for our products. We might get that this week, but going forward is, I think, when the market is looking and becoming concerned, why we sold off some of those futures contracts in the deferred contracts yesterday.
Always great insight, Brian. Thanks for popping in. We'll see you back here in less than 24 hours. Brian Hoops, Midwest Market Solutions.